You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
Good afternoon, everybody, and welcome to the Option Block, your home and your source for all options-related information, a little bit of education, a little bit of wit, a little wisdom, a little bit of funky activity, a little strategy, a little market news, a little bit what's happening and shaking in the option industry. This right here on the Options Insider Radio Network, home to, I think, 14 shows. Today it is May 23rd, 2016. As I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, doing the co-hosting for Mark Longo, who is away, but he will be back, I believe, this week. At least I'm pretty sure he will. And joining me would be, my one cast of character, since I don't have Longo and we don't have the Greasy Meatball. We have Uncle Mike Tosaw from RCM Wealth Advisors. Welcome, Mr. Tosaw.
Oh, always a pleasure to be here. This is the only thing on earth that would bring me in from such a beautiful day today in the Chicago area, and that is the option block and option trading in general.
And option trading. Was it really a beautiful day in Chicago?
Oh, well, in St. Charles it is, but then again, it's a beautiful day here every day. But I mean, it is just a perfect day out today. I'm going to be in a boat driving within 15 minutes of the end of this show.
Well, I think that is a great idea. I got to get my boat in the water. That reminds me. But besides that, we are here to block some options. So I guess with the end, I guess we did the introductory stuff, right? We might as well go right up to the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
And welcome, everybody, to the Trading Block. This is where we basically discuss what is on our screens, things, what's shaking, what's happening, what's running around in the world today. And I have to say, Mike, this is going to be more of a dialogue than a monologue. Besides watching the paint dry today, and I guess we had a little bit of a turnaround at the end of the day. I don't know if we could even call it a turnaround, because we're up what? We're up one handle in the SPX and we're down 3 handles on the close. Is that?
I would call that a veer. Like, instead of turn left, you veer left when you get the directions. I would say instead of a turnaround, maybe that's a veer around.
Do you think still we've got the with the Fed kind of doing, this is because now it's an option block, it's a trading block, so we have to criticize the Fed for confusing the crap out of everybody. Stocks actually, I think, shook it off pretty well last week. It looked ugly, then we didn't have the sell-off, and today there wasn't really a reason to rally because the G7. Do they have any more ideas left about stimulating the economy? Maybe they'll just give up after a while. It looked like there might be something out of that, but ultimately it was a big, as Longo would say, a resounding meh. Do you think anything will come out of that? All those great minds getting together?
I hope something comes out of it. What, I don't know, but you'd think there would be, but I don't know what else can be done. I mean, at some point, no matter how much you overthink stuff, if it's just not there, it's just not there, and you just kind of got to be patient with it. And sometimes I think that our governments try and overthink things, and I'm happy that they're at least trying, supposedly, but I don't know if there's much that can be done at this point. I think we need to we're in the let's just ride it out phase.
I kind of agree with you. Just everybody sort of has to get to work. But that has nothing to do with options, because the whole reason for options is we can avoid the real day jobs that everybody else has to have, I guess. But the next part is, I think that sounds fairly exciting, or could be market impactful, is this big Brexit decision. The British are going to leave. What are they going to leave? The EU, whether to remain in the European Union or not? Are they going to go it alone? They've been ignoring Europe for most of their, or kicking Europe's butt for most of the last 500 years. They've had a brief, I guess, flirtation with the EU over the last 20 or 30 years, whenever they enter the EU. And now they might exit because they don't like what all the bureaucrats in Brussels are foisting upon them. Do you think they're going to leave, and do you think it will impact the markets at all?
I think if they did leave, it would impact them. But the thing about the Brits is that they still have pounds, don't they? Because last time,
right? I think they're in the.
Last time I was in London recently, and they accepted euros and pounds.
Yeah.
And so with that, I mean, from a currency standpoint, I don't think that would be too much of an issue, but I do think that markets would react to something like that just because of the fact that it's like the British saying, hey, we're better than all you guys.
I think it sounds like that. I think mostly it's, if Britain leaves, who else is going to leave? And, Britain has a $3 trillion economy. It's like anything, it's the unknown. Oh my gosh, it's unknown. So we're going to keep vol higher, and we're going to be freaked out about it. I mean, we have a 15 VIX. I think a 1537 VIX Mo. They are pricing VIX relatively high, I think. The Fed came out. It doesn't look like anybody's doing anything. There was a lot of really kind of what I would just say strange sideways action. But, I mean, they are pricing, they are pricing like something's going to happen. And that's something, I guess, is when you look at the term structure in SPY, is all centered around, right around June 23rd, when supposedly this big vote comes out.
Yeah, I think that would be interesting, because right now I'm just looking with British bond yields being at multi-decade lows. I didn't know they were that low. But with the British pound being as weak as it is, with Britain leaving, I would think that would make them, and let's assume that the British pound stays weak, then I would assume that would bring more, in theory. Now, theory isn't necessarily reality, but let's say that you're just right around there in Germany or Italy or something like that, and let's say that you're actually doing well. I know that a lot of people in Europe are struggling, but let's say that you're doing pretty well and you want to spend the weekend in London. It might be fairly cheap to go there with the British pound being low, and of course that's a trickle effect for buying all sorts of goods from Britain. For example, I remember going on vacation to Mexico about a year and a half ago, and with the peso as insanely weak as it was compared to the dollar, it was one of the cheapest vacations I ever had. So I think that it would definitely affect them because of the fact that it would create a state of more independence for Britain. Now, whether it's good or not, that remains to be seen. I think there's a lot of unknowns with that, but the fact that right now the British bond yields are as low as they are, and I have to be honest, going into the show today, I was not expecting to talk about the bond yields of the British pound by any means. This is something that we need the Viceroy back for, by all means, but I think a lot of that is factored in. But from the standpoint of what this would mean politically and what it would mean in terms of Britain's relationship with just Europe in general, that I think is kind of a big unknown.
Right. So they have the potential unsettle. Right now, it looks like they're polling Britain staying in around 4 points higher than Britain leaving, but it's pretty close. So clearly a bunch of the population don't like the rules and regulations being foisted on them by the EU. You know, and the Brits have always been kind of go-it-alone types. And I don't know. I think, but that's, if there's a higher volatility numbers in the market, I think that's where it's coming from. I just don't see, there's just not a lot else out there besides the random scares that we just had in January and February about central banks basically being able to inflate economies or to help or whatever. It sounds like the market just decided they can't do much about it at this point.
Well, you know, what I'd like to see, actually, and I don't know if such a thing exists. This is something that, once again, Viceroy, if you're listening, we need an answer to that. You would be the only one that would know something like this. Does something exist, like we have the VIX to measure volatility on the S&P 500? Does something exist to measure British Treasury bond yield option volatility? Does such a thing exist? Because I'd be curious to see how that is looking for this upcoming event.
Right. You know what? I guess they do trade gilts. So if they trade the bonds, they have to trade gilt options, and there has to be a yield on gilt options. So, I mean, implied volatility on the options. So I guess it exists somewhere. I just don't know. Yeah, I don't know where it is. I think there could be volatility in, you know, other, even just, you know, look at the euro or the FXE, I guess would be the ETF by proxy. I mean, the FXE volatility is trading, you know, it's the June. Okay, let's put it this way. In the term structure, the volatility on the June 24s is 1042. That's the highest volatility of, I'm looking at 4, 8, 11 terms, and it's the highest volatility by far. So the June 24, and then it tapers off from there. The volatility in front of that is pretty much dead. Volatility for this week, 7.65. To give you an idea, volatility expiring with 1 day to go, because the Brexit's the 23rd, or the vote is the 23rd. Options expiring the 24th, or 10.42, which is the highest volatility's been in a while in there. So,
got it. So, folks, there you have it. You know that we're straight shooters on this show, that we can actually talk out how to figure some type of volatility measurement for British bond yields. If that doesn't prove how honest and straight shooters that we are, then I don't know what can be.
So my guess is there's probably a little more than ordinary in there. And, you know, right until the vote, the vol's going to stay high usually, even if the exit polls, just historically, volatility tends to stay high in these votes, all this kind of big voting stuff. Even if the exit polling is strong, or not the exit polling, but the, you know, when they go around and they ask, I can't even think of it right now. I've got a total brain lock on it. When they estimate whatever the voting outcome is, I can't.
Yeah, it's like the initial polling, and
yes, yeah, polling, right? So all the initial polling is right now it's 4% for staying in, and we'll see if the volatility actually, if that number gets really big, then you might see the vol drop. But normally, the actual volatility stays high until after the vote is done, when it's kind of a certainty. That's markets basically, when something's uncertain, they make it expensive, and when they know what it is, it ends up getting cheaper. So even if you don't like the outcome, it still will end up being cheaper. So I guess that seems like the only real news besides. Now, there was something here I thought that was slightly interesting that came over the wire today. And this is actually something that I think, if you really want, besides talking about the Monsanto takeover, is the SIBO is teaming up with Eris to come up with basically an alternative to over-the-counter derivatives, and try to point interest rate swaps to exchange-traded derivatives, which would then be cleared, use CBOE and OCC clearing function, it looks like, from what I can tell. which I think is a huge step. I mean, I think the biggest problem with the financial crisis was a big cause was lack of transparency in the markets. So anything where you could get more people to, trade kind of what I would say is non-vanilla derivatives, securities on an exchange. So you would have to put up all the proper margining and everything has to be transparent. I think those are better. I think that's better for the markets, even though Wall Street doesn't like it, but I think it's better. So I don't know what opinion you have on this one, Mr. Tosaw, but I'd like to hear it, whatever you got.
All right, whatever it is. Oh, man, you're leaving this one wide open. That takes a lot of faith in your co-host. No, I like the idea of it. I think that transparency not only is a good thing to have, but transparency oftentimes equals liquidity, in that it makes it easier for people to get in and out of things. A lot of time, not in all cases, but I think eventually it'll lead to more liquidity, because if things aren't priced the way that you need them to be, then you at least have an out. And I think by having it on the exchange, that can lead to more liquidity. And I think liquidity is also a big issue along with transparency. So I like the direction of it for sure.
Yeah, I think I would prefer most OTC derivatives put up on an exchange, making everybody have the proper margining for it. So it was one of a friend of mine who's been in the business for a long time. He said, the problem with the financial crisis is everybody knew what was under everybody's skirt, and then everybody didn't. Meaning, there was no faith in counterparties. It's not like the money just disappeared. It's just nobody wanted to be a counterparty for anybody else until the Fed stepped in and kind of said, okay, we'll make sure, because there's so many of this stuff, all this stuff is really offsetting. Everybody says, oh, the derivative thing is so big, but, there's a long here and a short there, and net, some guy makes money and some guy loses money. But what's important is making sure that that the loser is margined properly, making sure they have to always have margin up, and that way everybody has faith in it. So I like the idea, and I think for the SIBO, for them, that's a growth business. If the more OTC stuff they can move, downstream back to exchanges, I think they will be happy to clear and trade that business, I'm pretty sure, from all the people I know at the CBOE. And just one last thing before we leave the trading block. Monsanto. Now Bear wants to buy Monsanto. You know what? And it didn't get much of a premium. It looks like kind of these big sort of Euro US deals are not really getting people excited anymore. What do you think about that?
It's one where I know that Mark and I had talked about on the show a couple of weeks ago, with what was going on with some call options on that the day before when we had our legendary How to Cheat episode. But yeah, I think it's the fact it rose 9% in pre-market trading. I guess we'll see if Bayer really is better.
Well, I think part of the problem is it's not getting the risk arbs super excited because, regulatory wise, that would leave a lot of, fertilizer patents and stuff like that and seed patents in relatively small hands, which, there's already so much bad press on Monsanto and GMOs and all this other kind of stuff. I would be surprised actually if the Federal Trade Commission let any of this stuff go through. I would be, whoever the watchdog is for takeover, I would be surprised because the whole green movement doesn't like Monsanto anyway, and as long as this administration is still here, I think it's going to be tough for a deal like this to get done. That's why the ARBs are not really they're not bidding it up to, I would say, I would think 5% or 8% premium would be enough, but it looks shy of that by about $10. So anyway, it's just, again, one other, also it's the tax aversion stuff with the overseas buyer of a company. And I know the Treasury doesn't like those either. So lots of reasons that either of these deals don't get done, which is quite amazing considering $122 a share, all cash. Oh my gosh. And the stock is only trading 106. So that's just telling you that the market is cooling for these kind of deals. I mean, everybody getting burned before on all those other inversion deals. So I just thought slightly interesting. Other than that, did you see anything else that was really lighting up the tape today that you could get excited about?
I wouldn't say necessarily excitement, but Apple was up a little over $1 today. So aside from that, the fact that Apple was up a little over 1% today and on a slightly down day, I guess that's really not saying much, but it is saying something.
Ever since Buffett wanted it, the stock's up quite a bit. Now it's like, what, $7 from there? So he still got a little bit of the magic touch left, although I think he has not done as well with his technology picks. But anyway.
Well, maybe he's the new Carl Icahn. Now that Icahn's not in it, he figured he'd take over all those shares for Icahn.
Exactly. It's hard to fault the guy. He's been pretty good, over the last 50 years.
Yeah.
I guess with that, yeah, just a lackluster day. Feels like it's going to – VIX feels like it's going to stay a little higher, even though I feels like the market wants it to sell off a little bit, but just isn't doing that. Okay, and with that, I guess we're going to close out the trading block with those are a couple interesting tidbits we had, and we'll move right to the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the odd block. This is where, we dust off our magnifying glasses and start looking at the, let's say, just the underbelly of the option market, mostly the size paper in the option market. We look at activity every day in Option Pit in our chat room just to see what's going on and why or who is buying what. And I have to say, sometimes the paper is hugely head scratching. So what's amazing is the size of the paper and how head scratching the volume actually is sometimes. And I think I've got one for you here, Mike, that you might really enjoy from, let's just call it Head Scratching Central. So I have
my fingernails are ready to scratch.
Are they ready? Are they ready to itch?
Yes.
A Comcast CMCSA was up a nickel today. When we wrote about it, it was up a little bit more than that. It was up about 70 cents. It's near the top end of the range. I think also they're buying somebody as well, another operator. But this, now tell me if you like this. This is paper trading on the offer. They bought 10,000 Jan 2018 80-85 call spreads, which is about $20 out of the money in Comcast. Okay. Both trades at the time printed basically through or into the offers. So usually when we see option volume print on the offer, the trader's a buyer. But these are literally $20 out of the money with all of 2017 to go and half of 2016. So it's a year and a half option. But still, a year and a half option thinking Comcast is going to make some crazy highs. So the normal volume is around 6,500 contracts a day. I'm sorry, 18,000 contracts a day. There was 6,000 open on the Jan 2018 80s and only 600 contracts on the 85. So pretty much opening paper. There was also a roll. It could be a roll or, again, an opening spread in the Jan 2017 70-72s. again, that's $10 out of the money, and it was paper lifting the offer. So really strange. I don't know if they put the spread up at those prices. The customer wanted a higher price. I'm not really quite sure, but really, I'm just on a stock kind of like Comcast, why you would buy out of the money calls in the cable business. Mike, the only thing I can say is I have no answer for that. Why would you buy out of the money calls in the cable business?
Yeah, that's tough. I mean, I will say this for Comcast. I moved a little over a year, or not quite a year ago, but about 10 months ago. And so that when you move, you go through your new cable provider. You're trying to make sure that you have the best internet service provider and that type of thing. And so not only with Comcast, but also, or not only with just the cable and internet providing that they do, but Comcast, which network does Comcast own? They own
NBC.
That's right. They own NBC. So I think that they're not quite horse and buggy old school of a company, but they're definitely on the older school side of it. I think they're trying to take steps to keep up, but with that, they own NBC. Well, okay, that's fine, but like more of an up and coming type of company is something like Netflix, where they come up with their own shows and they offer this, that, and the other. Now, Comcast also offers cable and internet. That's kind of becoming more of a commoditized business, I think, as we go on. Now, in my area, Comcast is more popular, and I'll be up front. I've had very good experience with Comcast for the most part, except one time. It was awful, but they made up for it. They gave me a bunch of free months. I'll say that for them. But the model of Comcast, they're trying to take the old and make the old better than what the new is coming out with. And eventually, I think the new is going to beat the old. So, for example, the cable on the internet is going to be more of a thing, I think. With things like Hulu and, what was the other one? I forget what it's called. But you can get cable through the internet. You can get ESPN live through the internet. I believe HBO is coming through the internet. So that's another thing that you can get, or HBO, I think you can get directly through the internet as like a standalone. So I think that part of their model is bad, but they're trying to keep up with things like they have their Xfinity on demand. And so like I said, I think that they're trying to take an old thing and an older model and make it good. But I'm afraid that if they don't change a little bit more, they're going to go the way of the newspaper. Is Comcast going to go up 30% to where these 80, 85 call stupid's going to get touched? I do not see that happening at all. So with that one, my head is scratched, but hey, I've been wrong before. Good luck to the man who bought this 80, 85 stupid.
Yeah, 10,000 of them.
That's a lot.
You know, that's a couple bucks for sure. Anyway, so moving along, we have Bed Bath and Beyond, where, pretty much every newlywed couple goes and, they get some pots, pans, sheets, and curtains. Anyway, trading near the very low end of the 52-week range. So I think another one of these retailers, as opposed to Walmart, that seems to be getting kind of drilled from the Amazon effect. Maybe more people are, not going to Bed Bath & Beyond to buy their stuff and just getting it online. I'm not quite sure. But be that as it may, the stock is very close to 52-week lows. And here is, I guess, my favorite type of trade that I see. I call these the line in the sand trades, where the trader bought the 43.5, 45 call spread, and Bed Bath & Beyond's trading 42.52, so slightly out of the money call spread. And they sold the June 40 puts against it. Now, this is all happening or expiring on the 10th, June 10th. And earnings are not till the 22nd. And the divvy isn't till the 15th. So they're basically paying 27 cents, that's the debit, for this to buy an out-of-the-money call spread and sell an out-of-the-money put, and they're paying 27 cents to do that 4,000 times. The open interest in this cycle, in the June 10 weekly cycle, On these strikes, it was only 100 contracts. And I think in the whole thing, there was almost nothing. So there isn't a lot of open interest to speak of. Average daily volume is $4,100. But the thing that I was puzzled with when we were talking about in the chat room today is, why? Okay, you're paying money to sell the 40 level put in Bed Bath & Beyond, which is a 2-year low in the stock. So, okay, I get that. And then you have unlimited risk on the downside by selling the put. So it's not unlimited, but let's just say it's a lot more than normal. And then you go buy a call spread that you can only make $1.25 on. I don't see. Clearly, they did not read your book going long, because that's a trade with lots of risk and no reward. I don't get it. Even the debit, I don't get it. Why would you pay for that? So, Mike, maybe you have some inkling of why somebody would want to do this.
Unless this is some type of a roll close that we're not seeing, I'm struggling with that one myself. I was about to poke fun at you, and I said, oh, you're just mad because it's a debit. But no, there's a lot more to it than that. So I think this might, I'm hoping for the sake of the people who are in this trade that there's more to it that we're not seeing somehow.
Yes. I mean, when I looked for some stock to go up, didn't see any. But I mean, it's a hugely bullish trade. I hope it works for for whoever it is. But just a really odd, it's just an odd way to create that trade. I don't know what else to say. The only thing I can think of is Best Buy has earnings, or maybe they screwed up their symbol, which I've seen before. Best Buy, which is BBY, has earnings, I think, tonight. So it is possible they were trying to ride some coattails on the Best Buy earnings, and they are tomorrow night.
Made a mistake.
And they screwed up. I don't know, because I'm just looking at it. Maybe Best Buy has good earnings, and there might be a little halo effect for Bed Bath & Beyond. They don't really sell the same stuff, but you need to kind of those old school.
It's one ticker symbol off. What do you know?
It's 1B, and that 1B probably would give Longo fits. He hates it when the symbols don't match the names. It drives him nuts.
It's funny. I had a guy when I was about 10 years ago, and I was working with Options Express, and he said, so tell me about some of the things that you're trading this year. And so I said, I did pretty well with Bank of America, ticker symbol BAC. He said, oh, yeah? If you'd have bought my program, you'd have been trading Boeing. I would have reduced your workload by 30%, ticker symbol BA. So... okay.
I guess that works.
Yeah. So anyway,
I don't know if it's quite that easy, but I like the idea.
I don't either. I kind of like to think it is, but anyway.
Now, here's one trade that I thought was kind of interesting, and I believe this is Corning Incorporated, GLW. That's for the old Glass Works. It was up 21 cents today to 1972. It's in the middle of the range, I think, but you might know more about this, Mark. They do glass, specialty glass, and ceramics, and some some kind of technology glass stuff. There was a size buyer of the August 19 calls for $1.42. They bought 6,809 on ADV 8,600 contracts. The open interest in this strike actually is 15,000 contracts. So when I looked at this, August, I want to make sure I get that right. No, the open interest, a typo for me. The open interest is only 1,592 contracts. So this is clearly opening paper. I'm like, I remember it being a whole bunch of options. On the day, they traded over 10,885. By the end of the day, though, there actually was some sadness here, because those early aggressive buyers for 142, the calls are offered at 138 by the end of the day. But it's kind of an old-fashioned, just buying in the money call and see what happens. It has kind of the look of a newsletter trade where people get, a little giddy and they all kind of pile in on the strike. But really bullish. And isn't like GLW, isn't Corning, don't they make something for Apple iPhones? They're the glass maker for at least some smartphone somewhere. So I was thinking maybe there was some sort of play where somebody figured out that Corning is going to get some kind of contract for something. But anyway, so just straight up August 19 call buyers. I like the longer term. Seems like a smarter play overall than kind of the other stuff we were looking at. Well, that's the thing. For, not much more money, they have huge upside and very little downside buying the calls, relative to the Bed Bath and Beyond trade. So,
oh, come on. They should have sold a 15 put for 8 cents.
Exactly. But they didn't. They just got long. What do you think? A lot of leverage with this 19 call, I have to say, though. They're expecting good things.
Yeah, this is just a good old-fashioned call buy. This is if it goes up, it's going to make money. If it goes down, it's going to lose money. And hopefully, the person that trades 6,800 lots knows to get out before August expiration if it doesn't move. So this is just a good old-fashioned. It's going up.
I think so. And what's funny? It's a very cheap company. I know some diehard fundamentalists sometimes, but it only trades 1.3 times book value. I mean, that's just that's kind of Thomson Reuters data, but it is not a very expensive company. It's kind of quasi technology, although sort of old school technology, but I don't think anybody's replacing glass anytime soon, but maybe somebody will, but not very expensive company, And I think with that is our last. That's our last odd block, and I think we'll close the odd block and we'll move right into, let's just call the put your feet up and relaxing area of the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
Welcome, everybody. Hopefully you're sitting down, you have your glass of wine, you've lit your cigar, and now it's time to listen to the mellifluous sounds of Mr. Mike Tosaw describing the strategy of the day.
Mellifluous. Wow. I don't know what that means. I think I should be honored because it sounded very flattering.
So I just think of it like how it sounds. Sort of smooth. You're smooth. The music, the lead-in music for this is smooth. It's relaxed.
Yes. Got it. So I'm thinking of that country song where the only worry in the world will the tide come too close to my chair. But think of that. So
sounds like a Jimmy Buffett song.
Yeah, there you go. So anyway, what I want to talk about today is when not a lot is happening, don't try to make something happen when it's not there. Don't force a trade. I'm going to give you some examples of what forcing a trade would be right now. So let's say that you're just trading the markets and you're in cash going into today. You're in cash and you're thinking, well, I want to trade today. And normally your trading strategy, you need a big pullback to do something. Well, we didn't have that today. So with that being said, does that mean that you should settle for a trade? Not at all. Folks, just because, and I'm sure we even have some listeners there, if you live in Aspen, Colorado, you probably don't go skiing every day. And as traders, we do have that equivalency. We have the ability to trade every day if we want. But what I'm saying is that be disciplined and don't trade if it's not there. So another example is, let's say that you're watching a stock over and over and the stock's just not going anywhere. And then after the stock not going anywhere, you just decide out of nowhere, oh, I better sell some calls against it. That way, at least I'm doing something. Well, doing something for the sake of just for the sake of doing something is bad. If you're doing stuff to do the right stuff, like Andrew and I talk about all the time, it's good. But doing stuff just for doing stuff is like doing bad stuff. So those are two examples with which I'll see people doing a lot, actually. Stock moves sideways, but people just get impatient. And if the part of your original plan was to be patient with it and let the stock go sideways for a while, then it's foolish to change and start selling covered calls, because if it has been going sideways for a while, volatility probably is not very beneficial for you. And Murphy's Law, of course, is that as soon as you start selling covered calls against it, it's going to go up right through your short call, which might not be a bad thing, but it probably would be a better thing if you were patient and followed your strategy in the first place. Now, here's the other part of it. Let's say that you're a premium seller and volatility is low and you don't know what to do. What I would suggest doing, if you're in kind of a doldrum type market, meaning it's just not moving and nothing's really happening, or just kind of puttering around, but there's no volatility that you feel that you can sell based on your strategy, then what I would look to do is use that time to educate yourself on some other type of long volatility strategy. If you're just typically a condor person, then maybe look and really learn what a double calendar would be like. See how that could work for you. Don't do it right away. And if you need some help with it, obviously call up Andrew and Mark and the boys over at Option Pit, and they can do that. But my point is that do not trade just for the sake of trading. If you do that, more times than not, it leads to bad stuff. So with that being said, I know it's kind of a basic strategy block for today, but this is something that I think is very important, folks. So all of our listeners, I don't want you just doing stuff for the sake of doing stuff. And I'll leave you with this. Don't confuse activity with results. If you have to not trade for a month and a half and it ultimately still gets you to a better place than losing, you're better off. Once again, do not confuse activity with results.
I like that. Don't confuse activity with results. Sometimes, I guess also another thing, sometimes a good trade is just cash or not doing anything because there's just nothing there to do. And I think it kind of feels like it's sort of like the market we're in. It's not like it's a buying opportunity, and it doesn't really feel like it's a selling opportunity. It's kind of a, let's go on a 1 week vacation or 1 month vacation opportunity while the market sets up for this Brexit thing. I think it'll be kind of like a little pins and needly thing. So that is very, very, very good advice. That's all I'm going to say about that, Mr. Tosaw.
Well, thank you.
Now, we got some listener mail questions. I'm trying to say, here's a question from Trader Shawn. All right, there's a few. We'll just, oh my gosh, I didn't even do my intro. And we'll close out the strategy block, and we'll move right into listener mail.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, this is listener mail. This is the part of the show where we take your social media questions and we read them, and we try to answer those questions on the air. So keep your cards and letters coming. Of course, that is a metaphor. Nobody writes cards and letters anymore. They just type stuff in, and online it goes. Using all of the various outlets that the Option Insider has through social media. All the big ones, and the Option Insider Radio Network is there, and our show. So with that, we'll move into some listener questions. So there's a couple here, and I don't think we've covered this one from Trader Shawn. With the recent rise and fall of crude oil, is there an options tell that we can use intraday to see when these movements are setting up? So I guess this question is, can you use short-term movements and options to see if that's giving you any information? Is there something you could cover on this one, Mr. Tosaw?
No, it's tough. And this is if you're a day trader. Like what I'll see happen, I don't do a lot of trading in the slippery stuff, but what I'll see happen from time to time is, let's say that I'm getting out of a short put on SPY and I'm getting out for a profit and I want to get filled at 10 cents. and the market's just being stubborn to me. It's at 12 cents, even though the market's coming up a little bit. And I'm convinced it's just all those evil market makers who are out to get me, of course, that they're totally manipulating just my trade. I'm convinced of that, of course. Just kidding. But what all of a sudden happens is then I'll get filled, and then as soon as I'll get filled, SPY will move like $2, like right after I get filled. So I have a theory that the person that was on the other side of that trade that it would get filled, and then the movement would happen right after it would get filled, just in favor of the person who sold that put. So with that, I'm trying to buy my way out of it. So because of that, I think that just the person on the other side of the trade probably knew something that I didn't know, or maybe they got their information just a little bit quicker than it appeared on my screen. Who knows? But I'm willing to bet situations like that happen in the oil world. But most of the time for a real retail trader, I don't know if it's necessarily something with which you could trade on. Now, I know Sebastian talks about some volatility indicators and things like that. I'm sure you're going to talk a little bit about that too, Andrew. But I don't know if that's quite as prevalent in the oil world as it would be in the S&P volatility world.
Yeah, I agree. It's kind of hard to, volatility with those options in oil, mostly because it's hard. The easiest thing to say is it seems like people do a better job of front running news on equities than they do on, oil or something like that. I guess the algos can drive oil up. You might see some implied volatility, but I think very difficult to see any real option tells. Even if there's huge call buyers, the crude contracts you could look at, but it's kind of hard to get a sense of volatility and stuff in those contracts sometimes. So to be honest, the biggest, I think, really what we have seen is implied volatility in crude oil is going down. I think it's at a one-year low today. Generally, dropping volatility in crude oil means the price is usually going up or not going anywhere. And right now, the volatility is in the mid-30s, and there isn't that demand anymore. USO, it's at we're not even close. We'll put it this way. We're not even at anywhere near a one-year high in, I'm just using USO as an example. And the volatility is it hasn't been this low since, it hasn't really been this 30-day volatility hasn't been this low since October. And it was only lower than this for a brief moment in time basically at the beginning of last summer. So usually lower volatility, especially for the commodities, means kind of not, basically they're not really worried about the downside in there, but they're also really not, they're not looking at the big upside because you want to see like a lot of upside hedging for that. So that's all I would say as far as that. So the more the vol falls in USO, it looks probably like oil is, let's just say it's strengthening. There's a lot less interest in hedging the downside in there right now. And I think we have one more question too from, I do not want to butcher this name, so I'm just going to say the acronym. TH Gene N. Okay. There's a question from Facebook. Thanks for writing in. Good day, Option Insider. Just wanted to know if members of the option block panel ever make use of offline options position modeling. And if so, which would be their recommendations and why? What about tablet phone apps that model option positions? I'm frequently in transit and do not always have the luxury of an internet connection to access my brokerage account, but I love testing and modeling positions. Hence the question. Cheers. Actually, I know a lot of guys that use Holdly for modeling, and you can load stuff when you have an internet connection and use that in an Excel spreadsheet. So Holdly would be the first thing that comes to mind if you like to do, let's just say if you're sway with with Excel is very good because there are those products out there for that. I have seen several applications. I can't think of the name of them that are commercial, non-internet ones. There's absolutely no help with that. But they're out there. Mike, I don't know if you have any, because almost everything else I can think of are all online applications.
I do not, unfortunately.
Because we just live in an online world. I guess in the old days, that's all I used was offline applications, because that's all we had. There wasn't any internet to do anything. But nowadays, everything's online. Like I said, I think Hoadley, that's a lot of guys in our chat room that are sort of what I would say is sort of high-octane self-starters as far as modeling goes. That's the software they use for Excel. That's the only thing that really comes to mind. With that, I think we can close out the listener mail. And with that, we can move right into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And hello, everybody. Welcome to Around the Block. This is the portion of the show where we tell you what we're looking at, what's on our screen, what's coming up, what's happening, how are things going, what are we looking at. Is the BBBY going to be high or low for Mr. Tosaw for the next 4 days?
I don't know.
And Mr. Tosaw, let me know. What's up?
My kidneys are in great shape right now, so I mean that's not good. I need some more action for something to do with this. One thing, and I email Andrew on it all the time. It seems like 205 is the magic number on SPY. We're always in it, and today it took till the last couple minutes of the day, but we crossed 205 and came back again. So 2050 and 205 would like to see something different, just for the sake of looking at something different. That would be a nice thing. I guess we got non-farm coming up in another couple weeks, but in the meantime, don't know if there's really a lot to ponder with this. Of course, the summer doldrums. We can maybe even have this debate on Thursday of should you sell in May and go away. But other than what I just mentioned, can't say that there's anything that I'm really just looking at saying, whoa, not yet anyway.
I kind of agree with you. I think there is, there's still action. There's still, I don't know. I just feel like there is still a kind of latent angst with the equity market right now, and there's nothing pushing it. We do have some earnings. We got Best Buy coming out tomorrow, Hewlett Packard Enterprise, Intuit, DSW. Wednesday earnings, Costco, big one. Lionsgate Entertainment, for although you like the Hunger Games movies, Tiffany & Company, which is kind of a little bellwether, Williams-Sonoma. And Thursday, we got Sears, see if anybody's still shopping in those stores. Abercrombie & Fitch, everybody's shopping at Dollar General and Dollar Tree, though. Those are all Thursday. And Ulta Salon, which seems to be kind of a flyer of a stock. For whatever reason, everybody likes to go in and sniff the perfume. That could be the anti-Amazon type company as a retailer, So that's when you look at retail, you're like, what can Amazon do? They probably are not going to be able to get the fragrance through the internet. So it looks like that business doesn't look too bad. So, and lastly, to speak of the market, we have some new home sales are coming out tomorrow. GDP on the 27th. Not a whole lot. Like I said, we have very high. I don't know. VIX is relatively high, I think, for a 10 vol market, realized vol, and I think we might play 205 Pong. We might go back and forth 3 or 4 times this week and get absolutely nowhere while everybody's getting ready for the holiday. But that's all I can think of, at least for this session of Around the Block, and we'll close out Around the Block and see what we're doing here, what's happening, what's special at RCM Wealth Advisors, Mr. Tosaw.
Well, at some point the market is going to move again, and when it does, I'd like you to be ready, and I can help you be ready by being your financial advisor in one way, shape, or form. If you're interested in such a thing, the minimum with which we have, if you just have maybe $50 to $100 a month to invest because of the volume that I do and because of how I'm set up to do pretty much all online business, I'm able to give you the time even if you don't have $50 million. But if you do have $50 million, I won't turn you away by any means. So give me a call, send me an email, 312-212-3531 or mtosaw@rcmfs.com.
Well, that is a very nice offer you made everybody, Mr. Tosaw. At Option Pit, we have, I believe it is June the 11th. I'm looking, it is June the 11th. Understanding iron condors and butterflies, basically what makes them work and what makes them not work. And trying to figure out, really what's the best way and what are the best times, what the timing is like for those types of trades. Hint, a market like this probably isn't too bad for them. Even though volatility doesn't seem very high, it's actually relatively high. So not a bad time for those types of setups. That will be the Option Pit Saturday course. You can surf on over to Option Pit at www.optionpit.com/events. And with that, I'll thank Mr. Tosaw for coming in. I'll thank Longo for letting me host a show, and I will thank you all for downloading and subscribing and getting the Option Block podcast. And you're keeping it one of the top options radio shows up on the globe. And with that, we will see you all Thursday on the next episode of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.